right. We back, we back, we back. We back, we back, we back. We back for the afternoon session, y'all know what I'm saying? Alright, so we've got to lock down what happened here. 25% pivot in the zone. We got 1.75 it went. This one can close. We scored 4.8 on that. Still in the simulator. Let's go ahead and keep on moving. Please stay. I want you, I need you, oh gosh. Wow, the 30-minute must have worked brilliantly well. Big move down. What does the daily look like? That's the most important here. So it is coming back a little bit. Yeah, the low is not too far away. Or sorry, the high is not too far away. It could go up. Absolutely. Absolutely. Could go up. Anyways, we've got a couple trades that we've got to place here. So we've got the 60-minute anti-breakout from the morning session right here. I mean, what happened? This thing came 3-1, 4-1, 5-1. How far did it go? Oh my gosh, past 5-1. This thing ripped. That's 5.75 to 1. That's one of the best trades we have. I'm gonna have that in contention. Contender. Contender. Alright, it's a contender. Okay, it's a hit and breakout right now. You could go long on it again. I mean, that's what it looks like to me, man. Do you want to? I think I'm going to. We're up 4.8 apples in the simulated session. I'd take breakout here. It looks great. I'd go for a 1-to-1 at the very least. I don't know. I think it looks alright. Single. That's 3 contracts. 3 contracts at 31.75. 3 contracts at 31.75. My stop loss would be at this low. 11.5. There you go. That is only if it breaks out to the upside. Just because on the daily chart, wow, gold. What? Gold actually broke that high. That's big news. It hits its average true range at the moment right now. Not that it can't go more, just saying. It hit its average. NQ, see, it's right next to that high. And I'm saying, alright, it could keep bubbling. It could keep bubbling up like boiling water. Bubbling. It is also at its average true range. Crude oil, I haven't actually checked crude oil yet. I'm not going to spread my attention quite yet. Gold long, we have to mark down what happened. Oh my goodness. These trades fucking soared. Oh my gosh. I tell you what, you gotta hold on to these suckers because look how tight this zone is. Unbelievable. Unbelievable. I'm frustrated actually because I mean obviously we got out early, but man, oh man, oh man. Man, oh man, oh man. Anyways, it went 4-1 there, and that's a wide zone. I can only imagine what this tight zone did. Holy shnikes. 4-1 there. Let's take a picture of it. That's a 5-minute anti-breakout. I don't want to keep tracking this trade, but it's right at the high, so it can probably keep on moving. Zone number 1238. We're in on NQ. Take a picture. Roger that. Hold on. I said take a picture. Okay, yes sir, roger that. It's a 60-minute breakout. Really? I mean, this is probably risky. We entered at 1311. Zone number 1240. Take a picture. Yes sir. Sir, yes sir. Aye aye sir. Aye aye sir. Zone number 1240. 60-minute breakout. Let's take a look at the 15-minute. I don't think that held anything for me. There really is no other reason I'm taking this trade except for that daily chart. Look at the daily. The daily is like, all right, maybe it could keep bubbling. Or maybe not. Of course, maybe not. I think I'm going to get blindsided here, but it was worth the chance. Whatever. It is what it is. Obviously, I have less emotion into this when I'm on the simulated session, but I still want to win. We need Zaripski's upwardsies. Yes, see? Let's go on 0. Let's describe the trade quick. Oh, well, let's plant our stop. The low is 11.5, correct? Yes. Right there. We're risking 121.5. 4.9 apples risk, which is in line with what we want. Our target is 1-1, which is 56.25. 56.25. 56.25, which is 148.50, which is 5.9 apples. So we're risking 4.9 for 5.9. Again, this is a 60-minute 2-bar bubbling base. Protective free space of 1, perhaps. Alpha swing is, I don't know. The swing is up. The recent is up. It's in trend. Somewhat narrow, but I'm not going to say it's narrow. Anyways, that's what's going on right now. It looks absolutely like it's going to not work. I can tell you that. I mean, it absolutely roasted me on this one. Roasted. Roasted like marshmallows. Or chicken. I like chicken. Alright, this thing is really looking forward. I just want to go in. How far did this one go? So this one was, what was this trade? I mean, this was a 5-minute anti-breakout. This thing was heading down. Here, right here. This is it. Red bar, and then this next bar came up, and then went lower. And then I bought. And it went up to be here, and then eventually poop, pop, and it actually fucking ran. And all this time, my stop loss would be right there, never hit. Obviously, I got out at a 3-1, or actually a 5-1, which is up here in this area. But the thing kept on going. It kept all the way over here. Let's see how far it went. Like, how much did I have on it? 6 apples, dude. I had 6 apples on. This is gonna be bad, bro. I'm just saying right now, it's going to be bad because this thing went, I think, 15 to 1. That's my guess. Oh my gosh, it went more than that. And still counting. This is where it comes into Bonkerville. Bonkerville. The land of bonkers. 17 to 1. 17.25 to 1. That's fucking reckless. I'm just saying that right now. 17 to 1. Do you know what 17 times 6 apples is? 102 apples. Do you know what that is? Times 25 bucks, that's $2,500 in one trade. That is a fucking monster of a trade. A fucking monster. It's a monster. Once in a while, we have these just absolutely reckless trades, and they're always tight risk like this. Tight risk, and if you just hold on to the sucker, hold on for dear life, let this swing around, and rip and escape on that daily chart. Just let that thing escape. Look at the day. Dropped low, went up. Man, that's a hell of a move. It's a hell of a move. All right, NQ looks like it's going to get stopped out here. Boom, stopped out here. NQ stopped out. You know what? I wasn't really that confident in it anyways. Maybe I should have taken the anti-breakout. Looked too good to be true, wasn't it? Yes, it was. I'm out of there. Closing that trade, disappearing from the chart. We lost negative 4.9 apples on it. Right now we're back to break even on a simulated session. 0 NA on that trade. And we're pretty much free to do what we want now. So now I have time to look at crude oil. Okay, looks like it's going to break the low. Does it not? Of course it looks like it's going to break the low. What are you thinking? Nothing we can do about it now. No, there's nothing. I'm not shorting that low. It's way too down. Thinking I might lose you. Please, please stay. I want you, I need you. Please don't think I found the da 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 da. All right, I'm taking anti-breakout on this. Take a picture. And I'm going to go for 0.25 to 1. That's right. 0.25. I'm going to go... .25 to 1. Look, we need to risk at least 8 apples on this. So 3 contracts. 3 contracts at 40 if you can. 3 contracts at 40. 3 contracts at 40. 3 contracts at 40 if you can. If you can. My stop loss would be at 84.84. 84.84. That happens to be a low of day, isn't it? That's interesting. Yeah, let's take it. Look, on the smaller time frames, yeah, it's gonna break this low, but after it breaches this low, I'm expecting some pullback retracement, and then that's it for me. And I'm only looking for a small retracement to grab 2-3 apples out of it. Here it is. Here's the retracement already. It did not break the low yet, which is a little bit concerning to me, actually. Because here's the rally. Now I don't really want to do it. Truth be told. I don't really want to. In fact, I would go short on this for comeback bar prevention if you can. It's already done it. Please stay. Want you, I need you, gosh. I'm not sure anymore. 40's right here. Target would be up here. I don't know. I'm gonna leave it be. I'm sidestepping this thing. Why? Because it retraced, dude. It already retraced. I don't like it. I don't like it. In fact, I'd shorten now if you can. I'd short now for 0.25 to 1. That's 3 contracts right now. I'm in short 3 now. 48. Yeah. I know what I'm doing. Hey, yo. I know what I'm doing. 0.25 to 1. That's what I'm going for. I don't want any more. 85.20 is my target. My stop loss? Good question. 85.99, which is the high. So 86 flat is my stop loss. Take a picture. 86 flat is my stop loss. I decided to go short on it instead of long. Yes, that's true. 86 flat is my stop loss. Because it's looking bearish and there's demand underneath it. $156 risk, which is 6.2 apples. My reward is 0.25, which is 84 bucks. 84 divided by 25. This is a 3.4 apple. Hold on. Why? Oh, premature entry. Yada, yada, yada. I'm risking 6 to make 3. 1324 zone. Zone number 1241. Did you take a picture? I did. It's right here. Alright. Planting it. 1241. 240 minute. Ooh, it's a higher time frame. Both higher time frame trades. That's interesting. This is a 240 minute 2-bar building base. End of trend. Alpha swing is up. The swing is up. The recent is down. Anything else? Protecting extreme, you could call it, but I'm just gonna say end of trend. What else? That's all, man. That's all. Could you say protecting extreme? Yeah, it's close enough. You could say it's protecting extreme. PE tight, but end of trend covers that. Yeah. Anyways, it's gone 0 at this point. Now listen, this low is 43. This low is 41, so it did technically break out. So we're in the trade. Here's the anti-breakout. This is it. Anti-breakout should make it up to 0.25. That's where my target would be. 64. Let's call it 65 would be my target if I was long. Now, I chose against it because of it already retraced. The candle before it already retraced. And now it's already retraced again. But not quite all the way up to my target area right here. I think it has an opportunity to continue dipping, but we'll see. My target's at 20 right here, right there. This is the last bit of crude oil before the daily settlement price. Let's look at gold. Gold not doing too much. It's just sitting at the top. Actually, these are good times to hold overnight on gold, especially. Anytime you see a chart that's like this, these are the times you hold overnight to have that hop over the top, especially if the volume profile is the most at the top. But I reckon the volume profile is more in the middle. So, I mean, we can take a look at volume profile on that. Let's take a look. What's today is 0403. What time is it? 13:26. Let's call it. Let's see. So volume profile, not all the volumes at the top. A lot of the volumes at this middle section of the range. But it's closing such near the top that overnight, I mean, you're likely to see some increases. The question is, where do you put your stop loss? And it's probably looks to be right here, because this is where the volume tails off. Like, there's not much to go off of here, which is why it pivoted from here and also pivoted from here again. This area is just not much volume. It's probably going to go from volume to volume. This is the next stop, up down here. That's what usually, fundamentally, it happens. Obviously, nothing's for sure all the time. But that's it, in general terms, what happens. Crude oil. Let's go. We don't need average true range anymore. I already know the range is pretty much average. And it's dropping a little bit more. NQ, I don't know if it's gonna break this high or not. It's playing games at this high. Not a big fan of games. Just not quite a big fan of games at all, to be honest with you. It looks to be, it's just trapped in a range. Look at that range. Ding, 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 ding. I mean, it looks like it can break out on the 15-minute bar, or no, 30-minute bar. Looks like it can break south, but what's the point, man? What's the point? What's the point? So, let's see if crude oil is even possible or probable to go lower. Yeah, it's possible to go lower. 20 is my target, though. That would require it to turn red. Yeah, that's pretty far down. Maybe 20, maybe 30, but that's not quite a 0.25 to 1. So, my target's way down there. It's likely actually not going to hit. But I'm going to leave it there anyways. My target, or my stop loss is not likely to hit either. Alright, I mean, it looks like it's going to break lower. Really going to take a breakout in an anti-breakout environment? It's been done before. Yeah, I don't know about that. I don't know about that. I don't know about that. Let's just stick with the 60-minute chart here. Right now, this is a pivot. and this is a demand open technically, you can ask for longs, ask for the 60-minute bar to turn upwards for the last half of its life. Or it can dip lower. There's the breakout a little bit on the 30-minute. Here we go. Looks good. Looks good. Looks good. I'm not certain that this demand open will actually work. Yeah, I'm not certain. Please stay. Want you, I need you. Oh gosh. Well, if it wants to continue lower, I hate to say it, but I'd probably be short on this. Oh man, it doesn't do schneid. I mean, it's been doing sideways. There's not much to go off of here. It's just this low that it may or may not break, and this high that may or may not break. That's the big deal. And right now it's just testing between them. Like, all right, this is what I'm gonna do. No, 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 no. This is what I'm gonna do. Oh, no, no, no. Man, that would look bullish if it goes green, though. Holy crap. Do they want to sell that? Do they want the buyers to be there? Not certain. I'm not certain. All right. So if this wants to rally and break this high, I will take anti-breakout on this comeback bar because it matches well with the 3-minute underneath it. I would take that. I mean, I'd go for a 1-to-1 because I'm really not certain what the hell is going to go on here. And it would be 5 contracts. 5 contracts at 10.0, 5 contracts at 10.0. My stop loss would be at 20.75, 20.75. Should be in soon here. Here we go. We should be in soon. We're in. Take a picture. Take a picture. That's a comeback bar going upwards. That's a really bullish sign for the bulls. But if you want to stomp on the bulls, then they would probably destroy them here. And that's what I would say. I don't know if they will or not, but I'm just saying if they want to stomp on them, now's the time to stomp on them. Otherwise, you're going to let the bulls freaking multiply together and just start having bull babies. And the bulls just keep on going. And that may or may not happen. Who's to know? But I'm just saying, if you want to stomp on the bulls, now's the time, my friends. This low is my exit point. 99 flat is my target. 99 flat. Which is 115 bucks. What's my risk? 107. So pretty much the same. 107. 4.3 apples risk. 115 is my reward. 4.6 apples. This is entered at 1335. This is zone number 1242. It's not looking good right now, I can tell you that. This is a 5-minute anti-breakout. Ooh, wow. 5-minute anti-breakout. It was a 5-minute comeback bar. Alpha swing is, I don't know. The swing itself is up. Recent is up. Or recent is down, technically. Recent is up. Comeback bars. Oh, comeback bars. That means it's coming upwards, right? Yeah. I would call this in trend. Okay. 0 NA, that should have hit stop loss. Where's my stop? There we go. My stop loss is hit. Stop loss hit. Take a picture. So that breakout worked. The anti-breakout didn't, and I was on the form of anti-breakout. So now the 60 minutes going to be looking extremely bullish. There it is. I was thinking they'd stomp them out, man, you know, but I suppose not. Suppose not. Don't say. My gosh, gold's still going up. Crude oil, so it broke the low, but it has not continued. It's coming back against me now. It's about where my entry is. We still want it to go lower, down to here. I don't know if it'll will or not. You can't will it to do anything. I'll tune in.
Recording in progress. And as a matter of fact, if we just take a look at the sector ETF really quickly, you'll notice that financials have actually managed to make an all-time high here just this past month. Now, we broke out above that on a weekly basis. We're kind of trading back to that area now. But again, if you see, you know, I mean, like anybody looking at a trend like that, they're going to tell you, oh, yeah, this thing is pretty strong, right? But then you take a look at the relative strength for that sector, and you're like, is it? You know, because that's making all-time highs, but we haven't gotten above the relative strength highs from last year before, you know, that the sell-off of all of those major banks. Well, I shouldn't say major banks, but lot of the regional banks there got hit pretty hard last year. Now we are seeing a bit of a recovery, but we still have a long way to go. So on the way down, it developed the swing high here at 0807, and we did tag that back in January. I'm looking for the close above that level to suggest that we are terminating and reversing that prior downtrend here. So in the situation like this, obviously this is going to be influenced by interest rates, so you do have to remain relatively flexible here. And I think that's also one of the important considerations here. Like when you're looking at this, you're like, well, financials are defensive. Yes, they are. But there's a big difference in the interest rate environment now versus the prior 40 years. All right. So you're probably going to see a little bit of a change in behavior of that sector as interest rates continue to either trade up or trade down. So, it's going to be a situation that you can't really analyze through this historical information here, right? Because this gets cut off in 1998, right? So we don't have any other historical reference there. So as time unfolds, as we get more information with interest rates and how that's impacting the financial sector, we'll be able to rely on that data a little bit more. But right now, I think we need to be very flexible here with this. All right, last sector here, this is your commercial real estate sector. So this is the IYR. I like to look at the IYR. It's been around longer than the XLRE. So you will note that, again, since 2007, this thing has been in a major downtrend. There's again, been periods of time where there's been strength within that sector versus the S&P 500, but we just continue to see this thing get beat up. And as a matter of fact, when you look at the sector itself, you can see that it's not even managed to get out above those highs there from 2023, whereas with the exception of maybe utilities, pretty much everything else is either trading at or above their 2023 highs or even making all-time highs. So as we're taking a look at the relative strength ratio here, where would those changes take place? In order to see a termination of at least the shorter term trend here, we need to get out above 1776 and 1942. That hasn't happened yet. So 1942 is the level that I shared with you guys last month, but all we've seen is just a continuation here to the downside. But even then, this relative to where we are right now, that is going to be your major swing high. But even if we get out above that, I want to see that we actually have a trend reversal of some sort that develops on this to really say, hey, commercial real estate is probably going to be a really good buying opportunity, at least from a longer term perspective. Because back in the 2000s, the early 2000s, that was one of the sectors that actually outperformed the market and showed some positive returns while having to short the
here we go.
Market there. So going back to this diagram here, right? What do we know? So we know that technology, communication services, industrials, those are all showing signs of strength. When we take a look at consumer staples, utilities, healthcare, financials, real estate, with the exception of financials, so consumer staples, healthcare, utilities, and real estate, those are all underperforming the S&P 500 right now. If we were moving into a period in time where institutional money was rotating from offensive to defensive, we would probably see that these sectors' relative strengths are not in a downtrend. They're probably starting to go sideways, or they're making new highs versus the most recent swing highs. We're not seeing that. Why is that important? Well, going back to the very beginning of this presentation, if the evidence right now
6 contracts at
18.25,
18.25.
I need to be looking for market tops, right? I need to be looking for terminations of uptrends in these sectors that continue to trend higher, especially these here, your technology, communication services.
I'll still take demand open on it.
Oh, sorry about that.
25 is stop loss.
Look for whether or not. Okay, so let me. I'm confusing myself here.
All right, here we go.
Like I need a sip of tea. All right, so let me go back and state this again, right? So, if I think I'm at stage 4, strategically, what do I do? Well, I look for opportunities to participate in that trend because the trend's still up. Okay, that's what everything is kind of painting towards right now. But Do I know how long that trend's going to continue? No, which is why I still have to look for opportunities to join this trend. But I do need to be prepared for that uptrend, that bull market to terminate eventually. In which case, the signs that I would be looking for again would be signs that, you know, these downtrends within these defensive sectors have terminated, or maybe they're starting to go sideways. All right. Once I see that, and I see that I have the termination of uptrends, especially in the underlying ETFs for these products here, right? Consumer discretionary, technology, communication services, then I would probably say, yes, we have moved from a stage 4 to a stage 5.
One contract.
And over the course of the next 10 months, 12 months, I would expect lower prices within the S&P 500.
I'm in long NQ1.
I've only got
because
about
based on
14
this
minutes left here
demand
in
open.
the session. And I told you that this would be an abridged version of what I normally do.
Okay.
A little background here. I've been doing this for 17 years, right? And I will tell you that going through this process has helped me more than hurt me, especially in terms of expectations for the market, especially from a longer term perspective, and really kind of filtering out some of the headlines that we're all subject to, right? It's all too easy, especially to see a day like yesterday or the day before, where the first couple of days in April, first couple of days in the quarter, we're selling off, and everybody's thinking, okay, here we go, because we've been up for the last 5 months, right? So I need to go through this process to help me see
165 reward.
You know, a couple of days worth of sell-off like we had
Low is
yesterday,
99.
really kind of the beginning of that next stage, or if it's just short-term noise, then I need to be using that short-term sell-off.
So 220.
Get long in the market again. Okay?
220 for 165. 220 for 165.
And these charts are very, very busy.
Yep.
I'm not going to be able to get through
It's
all of
plotted.
these here
220 for
in the next 13
165.
minutes.
220 for 165.
This is at least a
220
visualization
for
of what I go
165.
through every month. Now, when I look at these, right, what we have here is the bond
165.
market. Okay, not a whole lot has really changed in the past couple of months, which is part of the
All right.
reason why I don't feel
So right now we've got
not giving
9 apples risk
still trading inside
for
of the range
6
there
apples
from
reward.
So even though the bond market has been down for the past 3 months, we've only been going sideways. Now, the reason why that's important is because if I go back to this diagram here and I realize that the reason why we're down for the past 3 months is because we're just trading inside of the range from December, then are we really in a downtrend? The answer is no. So there's a possibility that if we're not in a downtrend and we actually break out and continue the uptrend, instead of being in a stage 4, we're probably still in a stage 3. The implications there are significant because that would suggest that the bull market could continue. Okay? So, you know, this is, again, something that I look at to dissect the information that is being presented to me earlier. That way I don't just go into the markets with an automatic bearish bias saying, well, we're definitely in a stage 4. We're going to move into a stage 5 the next 3 months, and we're going to, you know, see a 20% correction in the S&P and be back down to 4,000, right? That's just too convenient, right? Now, going back to what I was saying earlier, when I break these things down, I have to identify the key levels in the market that are going to be really important. So what does that mean? You know, if we take a look at the most recent sell-off here in bonds, okay, yeah, you can see a downtrend on the daily chart. But as we just saw on the monthly chart, we're still inside of the range from December. It's not really a downtrend yet.
Are we still short crude oil?
I would want to see that we take out those December lows. Now, we did
That hasn't moved a dime.
In February. If we get a monthly close down below that 117.11,
wow.
Yes, we are probably moving back down to that.
This thing looks like it's going to get tossed.
In which case, you are most likely going to see that we are moving from that stage 4 to potentially stage 5. Now, of course, bonds can go down, stocks can continue to go up, but it's at least giving me some evidence there that we're getting kind of long in the tooth and that we're probably closer to the end than we are at the beginning. On the other hand, you'll notice here that I've got a couple of other key swing highs here. So that 124.40, wow, check that. 124.24 to 125.28, we get monthly closes above that. That actually terminates this downward move. And you know, I've said this before in some of the special All Asset Mastery XLTs that I've done, even mentioned it again this morning, that if you're looking at the market and you see that your downward swing is shorter than your upward swing, that's telling you that your trend in the higher time frame is probably up, which means that that downtrend that we've had on the monthly chart since 2020 is probably terminating, in which case I need to be prepared for us to remain in the stage 3 because bond prices are trending higher, and also understand how high those bond prices could potentially go, right? So projecting from this swing low right here, I would take that last impulsive phase, project from the swing high and that swing low, and that would tell me that bonds could potentially get out here to about 135.26. If bonds do move higher, interest rates are moving lower, and on top of that, we would be terminating, if we had a monthly close above this high here at 134.14, that would actually terminate the monthly downtrend. That would be very significant from a longer term perspective, all right? And I'd say a longer term perspective, like the next 3 to 5 years, okay? Now, I'm going to cover the S&P 500 really quickly, all right? But understand that I go through each of these. So here you've got the 30-year bond. It's the continuous contract. I've got the 30-year interest rate. I look at the CRB index. I look at the gold, copper, crude oil markets. I have our equity markets over here, the S&P and the Russell, and then I have the dollar index, the euro, Japanese yen, and the British pound. And I go through each of these, not only to kind of get an idea as to where we are and where we might go next, but also
It's about to get stopped out.
this in a way to help me understand,
That sucks.
again, what stage we're in, where are we moving to next, but where are some of my trading opportunities as well.
Oh, man.
Various markets. So I'm going to move this back out to a monthly chart here, and I realize this is a very, very busy chart. There's a lot of markings that I've put on here on the lower time frames, which makes it look a little bit busier. But what I want to point out here is this. Again, for the S&P 500, your longer-term trend is up.
0 NA. Done
Going
nothing.
back to something that I said earlier, what I would want to know is, where would that impulse terminate? Okay? Because when that impulse terminates, that means that we're going into a correction. So in this particular situation, when we take a look at the daily chart, your current swing low on the daily chart is actually right up here at 5104.35. Now that's a daily swing low. However, if we get a weekly to a monthly close down below that, that would tell me that we are probably terminating this impulsive phase, which looks like a daily uptrend since October of last year. And when you measure what the last correction was, that last correction was from point A to point B. That was about 10.92%. That was 500 S&P points. If we were to have an equally sized decline from that area, that would be about 576 or 10.95%, which would really kind of bring you back down to around that 4682 area. All right. Now, if that happens, you can look for short-term downtrend or uptrend reversals and new supply as a swing trader to go short. But once you get down around this area, you're probably going to want to trail your stops, protect your profits, etc. This large orange banner here that you see, that is the monthly supply formation that was broken. So being that we have broken out from that area, if we come back down to the spot, we could see that anybody that was short here and continued to be short, and they tried to get out of break even, or any of those breakout traders that had stop limits in here that didn't get filled on the way up, they're going to get filled on the way down, in which case you might have some longs coming into the market, or at least shorts covering. Either way, it's going to be buying. Now, from a longer term perspective, if we do continue, all right? Now, I always like to look at measured moves here, especially when you don't have supply, but we had a measured move target at 52.19, and it just so happens that that is basically where we've been consolidating for like the last week or so. If we get a continuation here above that 52.64 level, which is the high here from this past week, I'm looking for the continuation of this bull market to about that 6100 level within the S&P 500. And I realize that
I'm not sure.
That, it's like, man, 6100 on the S&P? Are you kidding? No, I'm not. And it's really
so the 240-minute bar, this current one, right? Started green,
that is more than achievable.
Turned down a little bit, tried to go green again, got rejected.
Just in the
and then
last
sank
5
low and
months
made
or
this low.
so, you know, that's been a 28%
How many turning
rally.
points is
So
this going to have?
continue from there, that would actually be a 50%
You know?
rally. That would be very interesting. All right. Now, there was a question earlier, you know, were you able to kind of forecast this turn here in October? So one of the things that we were looking at was the monthly and weekly demand.
I can't do it. Cannot do it.
And Brian Tyree Henry are just so awesome in this movie. They steal the show for me. Their interactions are so great. You can tell that they were having an absolute blast filming this one. Brian Tyree Henry is just so damn funny. He elevates basically everything that he's in, as does Dan Stevens. So you put those two together, just absolute magic. Loved those guys. And of course, the fights are incredible. The third act is just pure awesomeness from start to finish. I mean, I was on the edge of my seat the entire time. Just so damn entertaining. The monsters look amazing once again, and they get some actual development. Kong is the main character of this one for sure. He gets a ton of screen time. But don't worry, my boy Godzilla, and for all you Godzilla fans out there, he gets plenty of screen time as well. He gets his time to shine. I mean, not nearly as much screen time as Kong does, but he has his moments, and he's definitely awesome in this movie as well. And the monsters, like, there are several scenes that just go on with just the monsters, not even fighting, but just like you can see the expressions on their face, and you can tell what they're thinking without them having to say anything. And then it's just really cool. They did such a good job with that. I think that Scar King is an awesome villain, just totally like vindictive, evil dictator type, and
That's Breakout, man.
They accomplished that really well with that character. So this one totally worked for me from start to finish and exceeded my expectations. So Godzilla and Kong: The New Empire comes in at number 1. So there you have it, guys. There's my ranking of all 5 of the current MonsterVerse movies in the current MonsterVerse, the American MonsterVerse. So what is your ranking of those 5 movies? Drop a comment below and let's start a conversation. If you enjoyed this video, hit the like button. Likes are super important for helping me grow my channel and push my videos out to more people. If you want to see more of this kind of stuff, subscribe, hit the notification bell to get notified when I post a video. Stay tuned. I got some more stuff coming. I will see you soon.
Oh my gosh. It fucking faked me out. Shoot. That is reckless, man. Just getting absolutely tossed like the wind out here. Just tossed. 1359 entry, zone number 1244. We did plot the pictures already. This was a 3-minute 2-bar bubbling bass downwards. Actually, you could call it an HLC. Partial Y score of 0.5. Wait a second. Okay, R is always based on the individual trade. Thank you. That's a R of 1 then, huh? R of 0.75 actually. I think it's in trend at this point. Alpha swing is up. The swing is down. The recent is down. I'm going short on it. Anything else? No. Not at all. It's gone 0.75 now. This time with a 50% pivot in the zone. Look, we got our targets at 1-to-1, which is 83.5. 110. 111. What's my risk? 129? 129 for 111. Is that what I'm supposed to be doing? 129 for 111. 111. 4.4 apples reward. That's fine. It did break down. It's just, I don't think it might not have enough just momentum to push all the way to my target here. Yeah, I don't know. The 240-minute chart has gone down substantially. If you look at it, I mean, here it is. It has gone down substantially off its high. So is the daily chart. The daily chart has came down pretty substantially from that high. So it is going to reach a bottom at some point. And it did earlier. It did reach this bottom earlier. We'll just see what it wants to do.
In a comment below, and let's start a conversation about it. 2023 was a really good year for movies. It was a really deep year, and unfortunately, a lot of my favorite movies of the year did not get nominated for Best Picture. However, some of them did. As far as a thumbs up or thumbs down world, I am positive on 8 out of these 10 movies, so there's really only 2 that I did not like, and one of them, coming in at number 10, is going to be The Zone of Interest. I did not care for this movie whatsoever. I completely understand what they were going for, what they were doing with this movie, and they definitely accomplished that. But I think that they could have accomplished that in a 20 to 30 minute short. I really don't think you needed an hour and 45 minutes to do this. And because of that, I found it to be a very repetitive, tedious,
I might hold on to this.
pretentious experience with no story or character whatsoever.
I don't know.
And that's what I go to movies for, is the story and character. Just completely devoid of that altogether. It's well shot, I'll give it that. That's about the only thing I'll give it. I mean, there's so much filler in this movie, so many pointless scenes, and it is just so unimpactful, which is crazy given the subject matter, and so uninteresting, which is ironic given I'll describe it at number 9 is going to be Maestro, another one that I just found excruciatingly boring. This is, I've heard people describe it as
excruciatingly boring.
Trying way too hard to get an Oscar, and I completely agree. I think he's good in this movie, but I really do think he overcooks it and tries a little bit too hard sometimes. I think Carey Mulligan was great. She definitely stole the show for me. It's definitely a well-made movie. So what puts this ahead of Zone of Interest is that I was at least admiring the acting was not invested in the characters or the story whatsoever, which again is the most important thing for me. I just found it an incredibly boring experience, and it seems like the entire purpose of this movie was to get Bradley Cooper an Oscar, and it's not going to work. Number 8 is going to be Poor Things. There are certainly elements that I absolutely love about this movie, in particular the performances from Emma Stone and Mark Ruffalo. Emma Stone is the main character, and she does a fantastic job of playing this baby that is born into an adult's body and seeing her kind of explore the world. Just the way she portrays the character physically and the way she talks, so good, and I really enjoyed watching her journey in this movie. Mark Ruffalo is just hilarious. I mean, this character is so despicable, but you're endeared to him because of Ruffalo's hilariously awesome performance. Certainly, the movie has a lot of funny moments, and to me, it probably
I'm short NQ
as a comedy
and short crude oil, but it's so just such a really low volatile time, it seems like. But this thing could go down. Look at this trend. I mean, this trend, I joined pretty late here. I could stay in. This thing can trend. I mean, end of days coming up soon. Those things are volatile.
I thought it was too loud, and it just did not work for me whatsoever. I think scores should blend in with the scene more. I don't like when they're so over the top and bombastic, and then just like stuff with Willem Dafoe burping the bubbles. Is that what it was? I don't know. Just there's some weirdness in there that was a bit much for me, but it was an experience that I did appreciate overall. Coming in at number 7 is going to be Anatomy of a Fall. This is one that I just watched for the first time a few days ago, and I think it's a good movie. It is a good story. It's interesting, but it ultimately plays out in a pretty straightforward and predictable way. I was expecting a lot more from the ending, like some kind of big reveal or twist or something. So it is fairly unmemorable to me compared to a lot of other courtroom dramas for that reason. And then I have slight issues with the pacing as well. It feels like it was taking too long for the most part, but then it kind of rushes things towards the end. But it's a very well told story with really good acting. So it's a very well done movie. I just don't quite love it to the same level that a lot of people do. Number 6 is going to be Oppenheimer. Now, if you would have told me before 2023 that Oppenheimer would be number 6 out of 10 Best Picture nominees for me, I would have said you're crazy given how much of a Nolan fanboy I am. I mean, I have my Nolan fanboy card laying around here somewhere. But anyway, this is just not really what I look for in a movie, and a Nolan movie in particular. It's towards the bottom of my Nolan ranking. I do think it is really good, really well done. It tells a really good story. There's some really good themes in there, and I think the acting is phenomenal, not just from Cillian Murphy, but literally every single actor in the movie, even the ones that just appear in like one scene. There's so many people in this movie, and a lot of them were surprises. Downey's fantastic, of course, as well, but even the ones that were just in one scene that just had a cameo were incredible. So everyone does a fantastic job. It's very well made, very well directed. The score is really good. It is just a movie that is not entirely my cup of tea. I did feel a little bit at arm's length from the characters, and I think it's a little bit too long. I'm going to say it, I really do. It did not flow very well for me. I don't know if it had to be 3 hours long, and I don't really see myself rewatching it very often, which is not common for me for Nolan. For Nolan, most of his movies, I'm willing to sit down and watch at any point in time. Dark Knight trilogy, Inception, Interstellar, Memento, Prestige, any of those I can just sit down and watch at any given time. And this is definitely not the case with Oppenheimer. I've only seen it once. Don't really care for the Florence Pugh storyline either, how they handled it. I think they probably could have just cut that out. So, very well done, well acted movie. I completely appreciate it, but it's not one that I will really see myself going back to. Coming in at number 5 is going to be The Holdovers. Now, I don't have this quite as high as most people do, but that's nothing against the movie, really. I think it's really good. The acting is phenomenal. I think it's Paul Giamatti's best performance ever. Dominic Sessa is great as as well as the kid, and Divine Joy Randolph is so damn good in this movie. Brings so much heart to the movie, and she better win that Best Supporting Actress. I'm pretty sure she will. She seems to be basically a lock at this point. It's got a ton of heart. It's got a ton of emotion, and it's really, really funny. The only thing that really holds it back for me, the only reason it's not higher, is that it's just pretty typical for like an Oscar bait type movie. It's not breaking any ground. We've seen this kind of thing before. It is a really good version of that. It is extremely well executed. Again, I don't have any specific issues.
Oh my
with
gosh,
it,
now it's coming
but
down?
for
What
the
on
way
earth?
that I rate, review, and rank movies, the fact that it is formulaic is like the only thing that holds
Wow,
it back
look
for
at
me
that
to be
dip.
higher on this list for me. Number 4 is going to be American Fiction.
I think it's
I
going
just
down, dude.
got to see this one a few weeks ago or so, and I really dug it. This movie is really funny, and Jeffrey Wright is such a great actor, and I don't think he gets the credit that he deserves. He's phenomenal in this movie. Sterling K. Brown is great as his brother as well. Get a Best Supporting Actor nomination. Was it deserved? I don't know. I mean, it wasn't a big role in the movie, but he did a
Here we
really
go.
good job. Acting across the board was
Here we
great.
go. It's getting volatile
It's a
now.
very
It's getting
clever
there.
movie.
It
I mean,
broke the low,
commentary on,
but didn't
you know, the black
get me out.
community and what types of stories they have
84.
to tell in order to
Wow,
get
it got
people to
right
read
there.
them.
There we
The
go.
humor
I'm out of there.
and satire that comes along with that, I just thought was
Look at that just
absolutely
drop.
brilliant.
It just
Jeffrey
decided to
Wright was the
quit.
perfect
Look
choice
at that.
for this lead character. I dug the shit
Oh
out of
man,
American
that's
Fiction.
awesome.
Coming in at number 3 is going to be Barbie. This movie surprised the hell out of me. If you would have told me before 2023 that Barbie would be ahead of Oppenheimer in my ranking of movies for the year, I would tell you you're crazy. But man, this movie was just a perfect storm of every good thing coming together
2.25.
to make the best possible version of this movie. I mean, obviously, it all starts with Greta Gerwig, the director. She is just so damn good, and she's only made a few movies. I've only seen 2 of them, this and Little Women. But as far as I'm concerned, she's 2 for 2 with 2 home runs so far, and she directs the shit out of this movie. Margot Robbie was the perfect choice for Barbie, and she brings that kind of naive innocence to the character. And you have Ryan Gosling, who is great as Ken as well. And the song "I'm Just Ken" is the most iconic song of the year for sure. It's most certainly going to win the Oscar. All of these factors came together to make such an enjoyable experience that has a very on the nose but also very important message. The movie is really funny, and it's really clever for the humor that it goes for. Certainly one of the funniest and smartest movies of the year. And I've only seen it once. I'm way overdue for a rewatch, and I'm much more inclined to rewatch this than I am to rewatch Oppenheimer, and that says a lot. Coming in at number 2 is going to be Killers of the Flower Moon. Now, when comparing this to Oppenheimer, which are both 3-hour-plus long movies by
Oh,
legendary
shit.
directors from
Go, 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 go.
this one actually worked a lot better for me. It's
2
like 3.5
contracts.
hours
Fuck.
long, but it
At
flowed
53. 2
really
contracts at
well
53.
for a
Oh
3.5 hour
no.
long movie. Way different than
Does it
Scorsese's
run around
previous
without
outing
me?
in The Irishman, which
I'm
included
in.
3
Holy
sit-downs to
fuck,
get
this is
through.
going.
This one I thought had a
What the
really
hell is
nice,
going on right now?
brisk pace to it, and it tells a
I don't know
very
what is going on right now. I gotta put my
compelling
stop loss in though.
tragic story. You were just feeling sick to your stomach.
Low at
as you were
28.25,
seeing all these things
28.25.
play out, and the acting is
I'm risking
phenomenal.
$102.
DiCaprio, De Niro, Lily Gladstone honestly stole the show for me. And about the only issue,
Going for a
the
1-to-1.
only criticism I can level at the
Whoa!
movie is that I kind of wish that she was actually the main character,
I'm
the
out.
protagonist of the movie, because without really saying too much, she was missing for a good portion, like a third of the movie, and her presence was so
Holy
limited.
shit,
I
what
kinda
just
feel like I
happened?
really needed her to be around. And Jesse Plemons is great once he shows
That's
up
just
in the
crazy.
movie. The score is great, so this one really, really worked for me a lot better than Oppenheimer did. Number 1 is going to be Past Lives, and this wasn't even particularly close. This is my 3rd favorite movie of the year, and by far my favorite Best Picture nominee. Is it going to win? Almost certainly not. Oppenheimer is probably going to win. The Holdovers has a small chance, but as Past Lives stands, it's been a bit of a rough go for us because Greta Lee was not nominated for Best Actress, which is just insane to me. I mean, nothing against Annette Bening or Sandra Huller, but Greta Lee totally deserved it over them. And Celine Song should have gotten nominated for Best Director as well, certainly over Jonathan Glazer. But it is what it is. I love the shit out of this movie, and just to compare it to like something like The Holdovers, which again I thought was great. Past Lives I thought was much deeper, and it resonated with me on a much deeper level personally. So this is a very melancholic story about two people who were like best friends as kids, and they thought they would probably end up together as a couple, but they went their separate ways, and they're living their own lives now, and one of them is married now. And it's just a very good exploration of the path not taken and what could have been and where you're at in your life now and past lives versus future lives. And some really, really interesting and deep and emotional conversations these characters have regarding that stuff. It just really, really resonated with me.
All right, this thing soared.
And it's also really funny at times. And I wouldn't call it a comedy, but they definitely know when to sprinkle the humor in at just the right moments. And the ending is extremely bittersweet, but it fits the movie perfectly. This was just
went 9 to 1.
So well executed.
Gosh.
On a simple but extremely effective and emotionally resonant idea. So Past Lives is my number one Best Picture nominee, and if I had to pick the winner from those nominees, obviously Past Lives would be it, but I can't, so it's probably not going to be. There you have it, guys. There's my ranking of all 10 of this year's Best Picture nominees. How would you rank the Best Picture nominees? Drop a comment below. Let's start a conversation. If you enjoyed this video, hit the like button. Likes are super important for helping me grow my channel, push my videos out to more people.
Wow. Killers of the Flower Moon. Killers of the Flower Moon. Alright, 9 to 1. Alright, so I'm closing up these trades. I'm closing them. MCL. This one's closed too. I'm closing them because I'm going to leave soon. So I'm just going to do that. Crude oil, I got to close these up quick before it's over. Or sorry, gold too. But crude oil too. Crude oil I'm still short on. I'm just going to get out because it doesn't look like it's doing anything. Maybe someday it'll go lower. But not right now. So I'm getting out of there. Negative 0.5 Apple on that. And then gold. Gold you can go ahead and close up as well. I mean, it's still rolling up. I mean, just immense. I mean, how far has it gone? It continues to roll. It's gone. I don't even want to know. I don't even want to know. This thing has gone 20 to 1. 20 to 1 there. Reckless. Just absolutely reckless. This one, a lot less than that, I would say. 4.75 to 1, and that's how we leave it. And that's it. That's it. That's it. I'm going to end early. 10 minutes early. Just don't want to right now. So. And anyways, on the simulator, we didn't really pay attention to our risk. We ended the simulated session negative 13.4 apples. But we know the simulated session doesn't seem to matter. So it's quite like shooting hoops. No game going on right now, and at this time I'm gonna pause practice. Anything else? No, everything's accounted for. All right. So tomorrow, no sessions at all. Friday will be an afternoon session only. Dangerous afternoon Friday session. Well, it shouldn't be dangerous. The most you can lose is 8 apples, and that's not dangerous. $200.